How investment banking plays a role in initial public offerings, IPOs. Hello everyone. Welcome to the Finance Fusion, your clarity code for complex finance fundamentals. Today, we'll decode how investment bank plays a very important role in IPOs. Investment banking stands at the forefront of shaping IPOs, a pivotal financial milestone for companies to go public. This sophisticated financial realm involves investment bankers orchestrating the transition from a private company to a public company, navigating a lot of regulatory intricacies and strategically pricing and distributing the shares to the shareholder. As seasoned professionals, investment banker plays a crucial role in underwriting, advising on optimal timing and structuring the offering to maximize the value. This introduction sets the stage for a comprehensive exploration of how investment banking expertise facilitates the complex journey of companies entering into the public market, emphasizing the strategic guidance and financial acumen required for successful IPOs. Years now, it plays a role in IPOs. Number 1. Underwriting. In the context of an initial public offering, which is known as IPO as well, underwriting is when a business employs an investment bank to determine the worth of the company. The investment bank acts as an underwriter, buying shares from the business at a discount, frequently in conjunction with the other banks. Through this method, the company's general value is established. Usually a single parameter underwriting company is assigned, although depending on the size of the IPO, several investment banks may work together. The company's move to public trading is facilitated by the underwriter's subsequent distribution of these discounted shares in the open market. Through the use of the financial tool, businesses now can raise funds and expose a larger pool of potential investors to their stocks. Number 2. Due diligence. Investment banks carry out a thorough procedure known as due diligence during an initial public offering that entitles a detailed analysis of company's finance, operation, management, and other aspects. In order to ensure compliance with regulatory norms, this exhaustive examination attempts to confirm the correctness of the material presented in the IPO prospectus. Due diligence increases investors' trust and reduces the possibility of legal issues after the initial public offering by carefully examining each and every detail. In addition to protecting the investor, this thorough evaluation enhances the IPO's overall integrity and the openness, creating a much more secure and a knowledgeable investing environment. Number 3. Pricing and valuation. For investment bankers, determining the ideal price for an initial public offering is a very important, but a very difficult assignment as well. It's crucial because to strike a balance between drawing a large pool of investors and optimizing cash for the client company. If a stock is priced too high, it could be difficult to draw the investors. If the price is too low, the business might not be able to raise enough money. So to establish a reasonable IPO price, investment bankers work with the business executives. Nevertheless, there is no guarantee that their valuation is always accurate. Examples such as recent IPOs of Paytm and LIC show how pricing errors can affect the post-listing performance and investor sentiment only to discover in the secondary market. Preparing the IPO prospectus. Investment banks and the issuing firm work together to create the IPO prospectus, a thorough legal document as a part of IPO process. For prospective investors, this prospectus is an essential resource that provides comprehensive information on the business activities, financial performance related to risk, and in a lot of offering terms. It is essential in assisting investors in making well-informed choices regarding whether or not to take part in the IPO. Required by the regulatory agencies, the prospectus guarantees the openness and honesty, which builds investors' trust. A strong prospectus is necessary to draw investors and set upon the groundwork for an IPO that succeed in the financial market. 5th, marketing and roadshow. Investment banks are essential in promoting the initial public offering to possible investors by means of planned procedure called a roadshow. Investment bankers and corporate executives interact with institutional investors to showcase the investment opportunities during this roadshow. Getting investors interested in the IPO and getting commitment is the main goal. A crucial stage of IPO process, the roadshow, offers a forum of direct communication between the leadership of the issuing business and the prospective investors. The roadshow seeks to have trust, highlight the company's potential, ultimately draw significant investment for a successful IPO debut through talks, presentation, and answering queries and questions. Number 6, setting the IPO price. A crucial stage in the process determining the IPO price, which is impacted by the investors' feedback from the roadshow and valuation. The issuing firm and investment banks work together to decide on the ultimate selling price, which has a big influence on the IPO success. Through evaluation of company's value, investors' appetite, and market conditions are all part of this process. Finding the ideal balance is essential. A well-calculated IPO price can draw in investors, optimize the amount of cash raised, and enhance the performance of the stock in the aftermarket. Investment banks and the issuing firm are working together to make sure the IPO is priced competitively in order to meet the intended financial and market goals. Number 7, allocating shares. The allocation of shares is a critical responsibility for investment banks in the IPO process. These banks distribute shares to various categories of investors, including institutional investors, retail investors, and other clients. The allocation process takes into account factors such as overall demand of the shares, the investor's profile, and the relationship the investor has with the bank. Striking a perfect balance in the allocation ensures fairness and helps build positive relationship with the investors. Investment banks carefully manage this process to optimize the distribution of shares, considering both the interest of the issuing company and the diverse set of investors participating in the IPO. Number 8, lockup period. The lockup period is a strategic measure implemented by investment bank following an IPO. While investment bankers do sell shares to the public on the IPO day to raise capital and increase the company's market value, they also impose lockup periods on early IPO investors. These lockup periods, often lasting around 6 months, restrict early investors from selling their shares immediately after the IPO. The purpose of lockup period is multifaceted. It aims to maintain stability in the stock price by preventing a sudden influx of shares into the market, which could lead to a sharp decline due to oversupply. Additionally, it signals to the potential investors that the early shareholders have confidence in the company's future, potentially enhancing investor sentiments. This lockup period is a common practice in IPOs and is designed to balance the interest of various stakeholders while promoting a stable and healthy trading environment for the newly listed company. Number 9, stabilization. Stabilization is a post-IPO strategy employed by investment banks to support the stock price. If the stock is trading below IPO price, investment bank may engage in stabilization activities, which typically involve buying additional shares in the market. By doing so, they aim to prevent excessive price declines and promote a more stable and favorable trading environment for the newly listed company. Stabilization activities are conducted with the intention of aligning the market price with the IPO price and mitigating the short-term volatility. These efforts are temporary and are also usually carried out during a defined stabilization period after the IPO. The goal is to instill confidence in investors and ensure a smoother transition to the secondary market for the company's shares. Stabilization is a common practice in the financial industry and is subject to the regulatory guidelines to prevent the market manipulation. In order to conclude, IPO plays a very important role for the investors as well as for the overall financial market. Your journey into this financial clarity doesn't end here. Explore our archive of videos for a wealth of knowledge just waiting for you. If you found value in our today's video, give it a thumbs up and subscribe for future insights and share it with your friends. Remember, the more we learn together, we become more stronger. Thanks for being part of the Finance Fusion, your compass to financial enlightenment.